All right, cool. Well, let's go to some live charts. And I want to look at not just high time frame or low time frame charts, but I want to look at both because, like I said, I use Fibonacci both for long term trading, I use it for swing trades, and I use it for day trading. It is absolutely the most used tool I have, without a doubt. All right. So I'm going to start first, and I'm just going to use the ES futures chart here because we are at or near all-time highs. So it's going to give me an opportunity to use the extension tool. But it also is one that you probably trade or you reference every single day. So let me start here. The first question, and you're going to have to participate. Do you remember what the first question is that I need to ask myself? Is the market trending or is the market choppy? So if I'm looking at this weekly chart, this is a high time frame, right? I look at the most recent swing low to swing high. This is a bullish trending chart. All right. We are making higher lows and higher highs. It is in a bullish trend. So I right click. This is all done on TOS. Okay. That's the platform I use. So that's what I'm teaching on. You go to add drawing and you choose the percent right here. This is the Fibonacci retracement tool. I click on that. It is going to start at the bottom, this most recent swing low, and I'm going to pull it up to the most recent swing high. All right. The way you can tell if you have it ran correctly is that the 0 will be at the top and the 100 will be at the bottom when measuring an uptrend. All right? All right. Now, we asked ourselves the question, is the market trending or is it choppy? The answer was it's trending. So, the Fibonacci zone that I focus on in a trending market is going to be the 23.6 to the 38.2. This is the zone that I am looking for buyers to step in and then continue to the upside. All right. So on the weekly chart, because we're in a trending market, I want to look to buy a dip in this buy zone, the 23.6 and the 38.2. Now let's look at a name that is in a downtrend. And let me think of something that has been getting beat up. Is it PayPal? Yeah. All right. Same time frame chart, a weekly chart. But notice that this chart looks very different than the ES futures chart. This chart is showing a downtrending name. So on this chart, to measure a downtrend, I want to start at the recent or the significant swing high to swing low. All right. And same zone in a trending market becomes my focus, the 23.6 to the 38.2. In this zone, because we're in a downtrend, now your 100% is at the top and your 0% is at the bottom. We're in a downtrend. I am now looking for confirmation that sellers are overpowering buyers. So far on this weekly candle, I don't have that confirmation, but this is how you draw a downtrending Fibonacci retracement. All right? All right. Now let's go back to the ES futures chart, and I've shown you on a weekly chart. This is a higher time frame type of trading chart for me. But more recently, such as on a smaller time frame chart, the ES has not been trending, or it's not as clear, right? So I'm going to show you a 4-hour chart. And I'm going to show you that on this 4-hour chart, while we are making higher lows on pullbacks, we can't get above this ledge right here. Okay. We here's the all-time high, but we come up to the ledge, we fall back down. The ledge was down here. We're making some progress, but we're struggling here. Okay. So it is when the market is in a choppy, not clear direction that I want to focus rather than on the 23.6 and the 38.2. I prefer to focus on the 50 to the 618 zone in choppy price action. All right. So if I was looking at a 4-hour chart and I was looking for a buy zone that I want to trade for a day or 5 days, possibly. Okay. I'm going to look at the most recent move, and it's right here. After this sharp pullback, we started moving up. This is the most recent move. So let me show you how I would draw this for a smaller time frame trade. And I want to show you. This was the range that I had measured, and it's an actual range that we traded off of at Simpler in the SPX room, okay? This range was measured. Here we established, or we started the move on the 8th of July, and we created a pivot high here on or around the 10th or 11th of July. Okay, that's the range that was measured. But I knew that we were in choppy market conditions. All right, so that meant my focus, rather than on the 23.6 and the 38.2, my focus shifted lower because the market was in chop. All right. And it gave me a buy zone using the 50 and the 618. You can see here when price pulled back into that zone, buyers stepped in and price rallied. In choppy conditions, my original or my zone that I would use in trending conditions did not work. Be right there. And you can see that price did not respect that zone. In choppy conditions, price often does not respect the 23.6 to the 38.2, but it does respect the 50 to the 618. And it is why every morning I look at a chart and I ask myself if we're chopping or trending, and then I make my decision based on that one answer, what Fibonacci zone I'm going to focus on for that day if it's a day trade. So let me now show you on the NASDAQ futures chart, because it is much choppier. Wow. Do you see that? My NASDAQ isn't on here. That's weird. All right, well, we'll put it back on there. All right, so let me show you what this looks like for the NASDAQ, okay? I'm just going to go, oops, since we made the all-time high, okay, yeah, let's let that be in focus. This is Chop City right here. Everyone can agree we're just chopping. Price has moved from the all-time high down, then we come back up, we test it, we make a lower low, then we come back up, we test it, and it's just chopping. That's all that's happening here. So for the NASDAQ, my focus without a doubt on a day trading chart is the 50 and the 618. Now, on this pullback on the NASDAQ, if I'm trading this zone, I'm going to ask you a question. Was I stopped out of this trade right here? Was I stopped out of this trade right here, trading this zone? That's right. I was not stopped out of that trade. And Renata asked, that's right, because it didn't close. No close below it, no stop out. Renata asked, couldn't you just measure any range that you wanted to trade? Sure. Let's say that I wanted to use this 4-hour chart, but I wanted to use this range here, all the way from this pivot low to the all-time high. You can use this range if you wish, right? All right, but let me talk about this. I can use this range all the way up until this candle right here. And the reason why I say until this candle right here is because when we closed so far below this 618, this bullish range is no longer intact. Okay? Then at that point, the range that I need to measure is a downward range because price broke below that 618. So then if I measure here, you will notice that we broke above the 618. So that is not the accurate range to measure. The more you do this, the more you're going to be able to see the most current range. See how the 618 was broken? That's not the range to measure. Like I said, I knew that this was the range to measure just because I've been using this tool every single day on every single chart for quite some time. All right. So this is the most recent accurate range that is intact because we've had no candles close below the 618. All right, Renata, does that make sense to you? I want to make sure before I move on from that concept. If you're new to using Fibonacci's, you might have to go through and check for 618 golden Fibonacci ranges to be broken. And you might have to do that until you get good at just visually seeing it without really drawing it on there. Okay? All right. So to recap, when price is in a clear uptrend, and there's no doubt about it, let's look at Apple actually, because I know this thing is without a doubt in a clear uptrend. Okay? There's no question what kind of trend Apple is in. So, what zone, if I was measuring this move on Apple from the end of June to the most recent all-time high, what zone would I be looking at to trade on a pullback? That's my zone, right? That's right. Trending market. I run my fib. There it is. What about if you just wanted to day trade this move on Apple and you didn't want that entire range, right? This is a range, if I'm measuring 3 weeks of price action, it's a range that I'm going to use for a swing trade. If, though, I just want to take today's wicked, crazy, fast move to the upside, and I just want to use this range for tomorrow to trade, again, is it trending? Yes. This already worked once. This zone, you see the pullback right here, right? And look at the bounce you got from it. It's already worked once. This is the first zone I would be paying attention to. Trending. And I'm just measuring this rally right here for a day trade tomorrow. Okay? All right. Let's look at examples of how to use extension targets when you have no higher, in this case, price action, no supply, no resistance, nothing to use for additional upside targets, right? I've got the all-time high, but what if I need a target above an all-time high? If I want to swing trade the S&P 500 and I want to swing it out for a couple of months, right? I need higher targets. Because we are at all-time highs, this is when I will utilize the Fibonacci extension tool. And I'm going to take the most recent significant move. I'm going to now right-click at the bottom of that move, go to Add Drawing, and you use the percentage, but it has a move up. And that's your Fibonacci extension tool. All right, it is started at the base of this move. I go up to the all-time high, and I'm going to double click right here. Okay, now it's up to you. I'm going to tell you what levels I mark on extensions. I like the 1272, and it doesn't have to be an exact. I just go in between this 236 and 38.2 extension. 1272, 27.2. Okay, it's right about there. All right, then I definitely the golden Fibonacci level right there. And then a 100% of this move right here. Okay? That's how I use it for extension targets to the upside. Now, vice versa. And I'm going to go to a name that I know is at lows. Okay? But I need to go to a smaller time frame chart so you can really understand it. And that's SpaceX. Okay? We're going to use SpaceX. We have a pivot high, pivot low. This is the all-time low because this thing IPO'd at $135. 132.15 is a low, all-time low here. What if what if I'm trading SpaceX to the downside and I need further targets to the downside? Well, I can take the most recent swing high, use that same Fibonacci extension tool down to the all-time low, double click it, scroll down, and the same way that I used it to the upside, I can use it to the downside to give me targets below. All right, but I only use the Fibonacci extension tool if price is at all-time high or all-time low to give me targets. All right, cool. All right, so we have covered how to mark zones for entries if price is at or in trending markets. We have learned how to mark price or zones, Fibonacci zones for entries in choppy markets. We have learned how to use Fibonacci extension tool for targets to the upside or the downside if price is at all-time highs or all-time lows. Now, the other method I use Fibonacci for is to find secondary or use a secondary draw to identify targets. And this is something I do daily. Daily, I will do this. All right, so I'm going to go to a smaller time frame chart. And I'm going to show you how I would find targets upside and potentially downside on the ES futures chart for a day trading plan tomorrow. First thing I did, I marked the all-time high. I'm going to mark the pivot low or the down move right there to give me another upside target. And then I'm going to go into the most recent price action here on the 2-hour chart. And this isn't a lesson on how I find buy zones and sell zones. We've already did that. So if you haven't caught that session, make sure and check it out. If you're a member and you're here right now, you have access to that. So I know how to find my buy zones and my sell zones. But what if I want to use Fibonacci levels in between as targets? Whoops. I am going to use a Fibonacci draw in both directions to get those. Okay? And let me show you what I mean. Get your buy and a sell zone right here. All right. Now, how can I use Fibonacci to find levels to target? The range I have drawn is right here from this pivot low up to the most recent pivot high. I told you that I like to use the 38.2 and the 618 if I am finding targets, right? All right. We have established that ES is in choppy conditions right now. So I already know this 618 and this 50 would be my Fibonacci buy zone for tomorrow, right? But the 38.2 is a stop along the way. You can also use the 23.6, depending on how many targets you're wanting. If I only want 2 targets on the way to my eventual ultimate target or zone, opposite zone, if I only want 2 targets, I use the 38.2 and the 618. If I want more targets, then I will use the 23.6 as well. Okay? All right. So now I have targets from this sell zone on the way to the first buy zone and the second buy zone. Now, if you're wondering how, okay, but how can I use Fibonacci from if I have a sell zone here, right, and I want levels inside of this zone, okay, there's a couple things that you can do. The first thing is you can draw your Fibonacci down right here. Yep, and we're above all of those. So what I like to do is just to do a hypothetical draw from the all-time high down to my buy zone right here, okay? And if I were trying to create targets back to the upside from this buy zone, this is how I would do it. This is hypothetical. Price has not already come down here, but if it were to come down here, I would draw this to wherever that low is, and then I would mark the 38.2 and the 618 to give myself targets back to the upside. Because remember, these are Fibonacci levels here of the up move. They're giving me targets from the sell zone. But if I were trading this range back to the upside and I wanted targets, we have to hypothetically say that price turned down from here. Price came down to the buy zone, and then I would have my targets like that. All right. And so I know if I'm going long from this buy zone that I'm going to first target 75.95 and then 76.05 on the way back up to my ultimate target. Okay. I don't know where price will turn back down, but once the candles are there, then you will have the information that you need. Let's look at a name that possibly has that candlestick structure, and then you can see it in real time. Okay, Intel. Intel had a big sell-off, right? It's pretty obvious if you were a part of this session that we did, I believe last month, that's a sell zone because you got that big old imbalance candle right there. And if you're wondering why price stopped right where it did, I want you to draw your attention back over here to the imbalance candles in and around this area, namely this one, but also this one. Okay, that's how I'm going to create a buy zone here using this imbalance move, and it has been tested. Okay, so the first part of any chart is to find where you want to be a buyer and find where you want to be a seller. The next part, though, is to find Fibonacci zones in between. Okay, so let's say we wanted a Fibonacci zone and on this down move on Intel, right? I would measure starting at the top because I'm measuring a down move, and this is for an intraday chart. And I'm going to draw it down to the most recent low. All right. You have to ask yourself, is the trend bullish or bearish? Or is the trend trending or choppy? Just from a day trading perspective, so smaller look back, right, to the end of June, if you notice, you're making lower highs and you're making lower lows. This is a downtrending market, right? Okay. So my first zone to potentially go short from is actually right where price bounced. My second Fibonacci zone would be right here. Okay. You can draw them both on your chart because remember, you are going to be waiting for confirmation, or I am going to be waiting for confirmation before I just take the trade. But I have two Fibonacci sell zones. Let's say I was trading Intel, though, from for a swing trade, because this is a buy zone on an intraday chart, but it's also, I'll show you. Woof, I don't know where I put it. It's also a buy zone on a daily chart. Okay. You see the inside and up, you see the buy zone on my chart, right? Okay. So if I'm trading this intraday, I showed you the two zones you could possibly go short from. But if you are looking at this on a daily chart, this isn't so much trending as what it is chop. Do you see that? The amount of time you want to be in the trade tells you which time frame chart to look at to assess if the trend is trending or chopping. And this is just back at the bottom of a choppy range that Intel has been chopping around since, what's that say? 1st of May. Okay. So if we're in a choppy market and the most recent move is down, which zone would I look to go short from in a choppy market? Which Fibonacci zone? The 50 and the 618, right? Okay. Now, but I can also use the 38.2 as a target. And if you want another target on the way to this zone, use your 23.6. So a trade on Intel for a swing trade would look like this. I would go be a buyer here and trimming with a target here, and potentially looking to go short if price rallies back to here. And then what am I going to have to do? Well, I'm going to have to be hypothetical again, because these Fibonacci levels are for an opposite draw. So let's say that this is the low that's put in, and price has rallied to my sell zone. Then I use the new Fibonacci levels for targets. Okay. And now I'm short from here, and I'm targeting 113 and 107.5 on the way back to 101 by 92. Do you understand? Renata says, couldn't you also measure one candle on the 2-hour, then go to even lower time frame, 3 or 5 minute, to set bullish targets? So honestly, Renata, you wouldn't, I mean, if you're on a 2-hour chart, right? You're still a day trade. This is a day trading chart for me. Okay. And you're measuring this move right here. It doesn't matter if you're measuring this move on a 5-minute chart or a 2-hour chart, you're still measuring that same range. And it's going to give you the same targets regardless of the time frame that you're measuring it on. Does that make sense? I wouldn't measure for a day trade. I wouldn't use this whole range because it's just too much range for a day trade. I want to use 1 or 2 days worth of price action. Something that makes sense, like this pivot high to pivot low, makes complete sense. But whether I look at this move on a 2-hour chart or a 5-minute chart, it's still the same move from pivot high to pivot low. Okay. I would still measure the same move because that is the most recent significant move. So don't worry about switching your time frame charts to be that precise. Just measure the significant move on, for me, a 2-hour chart for a day trade, and it's going to give me targets to the upside. Okay. All right. Let me pull over the chat here, and I'm going to give y'all an opportunity to ask any questions that you might have about how I use Fibonacci um, for entries, how I use Fibonacci for targets, and how I use Fibonacci to stay in trades. That's one thing I didn't show you. So let me pull up a recent or just a hypothetical trade. Sorry, on SPX. We definitely had enough swings in price action as of late on SPX to show you plenty of opportunities here of when to stay in and when to get out of trades. So let's look at SPX and today's price action actually. All right. So in today's price action on SPX, we had some opportunities to be short, okay, from a sell zone. And if I am short from this sell zone, and I have made it to, and in this case, it was 2 targets down here, okay? And I want to stay in the trade using the Fibonacci technique, okay? I'm in this trade. I'm short. I've taken profits at 2 targets, and we get a candle that closes above the 38.2. I exit the remainder of my position. Okay. Let's say that you're in the trade from here and you catch this big move right here. Okay. In the trade from here and you caught the move and you're in a runner type position, I want to stay in as long as the 38.2 holds as resistance and I get out on the candle that closes above the 38.2. I've taken the trade from here to here. I've collected my profits and I want to stay in if the trend wants to keep going down. But once price gets above that 38.2, it is a telltale sign that price is probably reversing. And that's exactly what happened there. Okay. Let's say I'm in the trade from the low down here, which was a buy zone, and I've ridden it to the top right here. I want to stay in my runner position as long as the 38.2 holds as support. There's no candles closing below the 38.2. I stay in the runner position and it cash settles right here. This is a way that I use the 38.2 to stay in positions. Now, I will say, for the most part, for me, intraday trading and scalp trading, I do not use Fibonacci to stay in my runners. I use candlestick structure. But for my swing trades or longer term trades, without a doubt, it is a thing for me. So let's say that you're in Apple, right, from the lows to the highs. This trade is valid long term as long as price remains above 307.90. I look for this trend to continue to the upside. No need to get out of the trade. Okay. Let's say that I wouldn't have been, but let's pretend that I was short Apple right here. All right. I would want to stay short as long as price closed below the 38.2. But once it closed above the 38.2, telltale sign it's probably reversing, and I would be stopped out right here on this candle. Okay? All right. All right, guys. I don't see any other questions that y'all have, and we've been at this for an hour and 10 minutes. I want to respect your time, so I'm going to hop off of here for now. Thank you so much for joining me this evening. Thank you for being a member of the channel.